What's up, everybody? It's Hey John. I jabber opportunities nonstop. And today's video, we'll be covering why is cryptocurrency sinking? What are the pros? What are the cons? What is going on? So stay tuned and watch this whole video if you want to capture this insight. So yesterday, we saw on the news headlines, $600 million were hacked and stolen from Ethereum, from Polygon. Wow. I mean, just wow. You were hacked and you lost $600 million worth of Ethereum. And you were seeing Poly literally go on Twitter saying, hey, please return our monies and our assets. Are you serious? I mean, if everyone did that, then yeah, there will be no need for the FBI, CIA, or anything, right? We could just hope and wish for the hackers and the thieves to do the right thing if you ask them nicely. I mean, holy cow. And of course, you do realize that with cryptocurrency, there is no FBI or CIA who's going to back you up here because, as you know, it is not SEC regulated and it's not protected in any which way. So it's literally the wild, wild west. I suspect that everyone who lost money through the Poly network and they lost $600 million worth of Ethereum, well, I suspect those customers are going to be very ticked. I mean, I would be. This is why I believe if you want to trade a cryptocurrency, you need to hold it or you don't own it. What does that mean? It means that you need to put your cryptocurrency into a private and protected cold wallet. Well, what is a cold wallet, you ask? Well, a cold wallet could be a Ledger Nano, it could be a Trezor, but it is essentially you, yes, you watching this video, becoming your own cryptocurrency central bank. Yes, cryptocurrency central bank. That means that only you have access to your private keys and no exchange or anything has access to it. However, though, I do know most folks like to put their money and their cryptocurrency into other brokerages like Gemini, Robinhood, whatever, right? The whole point of doing that is because maybe you'll get free trades, or Gemini, in this case here, will give you about 7%, I believe, or 6.5%. I forget the exact number. But they basically give you interest on your Dogecoins, and that's fantastic, right? But what happens if Gemini gets hacked? I mean, if they get hacked, yes, you've been making 6.5% or whatever interest rate they're giving you on your Dogecoins. But if someone hacks and steals all of it, well, you are giving that 6.5% to someone else, the hacker here. And as you know, there is no recourse when this happens. You're just SOL in the air. It's all gone. And you can point fingers at Gemini, Robinhood, Binance, whoever you're in the brokerage with, but if it's gone, it's gone. I mean, do you remember a few months back in Turkey? There was an exchange and the CEO basically closed down shop and took all the Bitcoins and cryptocurrency wisdom. And if you had your money in that brokerage, well, guess what? You now have zero. And now we're seeing the government coming in to stifle innovation by dictating or telling what you can or cannot do with cryptocurrency. The infrastructure bill is currently showing that everybody can be a broker. Well, what does that mean? It means that if you are a miner, you can be considered a broker because you are distributing, cryptocurrency. If you're an NFT person here minting NFTs and distributing it, well, you can be a broker. The current verbiage from the government is very loose and it makes everyone into a brokerage. And that is very scary because there will be lots of enforcement to do to track everything. And if you're not a brokerage already, to track this stuff, well, it's going to be nothing short of a nightmare. So this will definitely create some turbulence in the cryptocurrency market. And on top of that, we're seeing the news of $600 million of Ethereum hacked on the Poly network. So we're seeing lots of, well, I would say bad news coming out for cryptocurrency lately. Let's go in and cover the charts now, okay? Let's go ahead and cover some of the charts now. Okay, so yesterday Bitcoin was trading at about 46,735. It had a nice peak right there. But once the news of the $600 million of Ethereum came out, well, Bitcoin started to sink. It was very interesting to see because when it sank here, right, we were seeing Ethereum also sinking from $32.65 to about $3,000 throughout time for the whole day. But the interesting thing here is that we were seeing Dogecoin actually having a divergence between Ethereum and Bitcoin. We were seeing Dogecoin go to about 29.41, and as Bitcoin and Ethereum were sinking, Dogecoin was rising. And it was interesting to see. And the reason why this happened was because Dogecoin was doing a little decoupling from Bitcoin and Ethereum, though I suspect it was mostly due to the FOMO action because Dogecoin was getting very bullish. And the folks who were buying it, well, guess what? They were getting excited. And when you see excitement in Dogecoin, it's very easy and very fast to see a rise. So we saw the decoupling yesterday. But of course, over time, once folks got wind of the news, of the Ethereum news, well, guess what? It started to pull back and people started to sell because that's a very bearish, ominous sign. And now we're seeing Dogecoin playing ball again. The volume yesterday was 5.7 billion. Yesterday, it was about 3.4 billion. So we're seeing another about 50 to 60% increase in volume in one day again. This volume increase is phenomenal. Again, Dogecoin trades best when there is a lot of volume. So let's see here. Bitcoin is down for the day 5.29%. Ethereum is down 6.88%. Dogecoin is down 6.81%. That's okay. That's okay. Because overall, Dogecoin is up. It's up over, I would say, 30% for the week. Bitcoin about 13%. Ethereum 9% for the week. So yeah, we're losing some of the gains here, but overall though, you're still up. So yes, it's unfortunate. Yes, it's a little sad that we're seeing Ethereum hackers stealing $600 million worth of Ethereum here and seeing many folks just losing their money overnight. However though, that is the game here, right? And that's kind of why I believe that if you want to hold your crypto, yes, hold your crypto. What I mean by that is actually put it into a cold wallet, right? Don't leave everything on the network, okay? Put it into a cold storage wallet here so no company or nobody has access to it but you, and you are less likely to get hacked because who's gonna hack 12 words? I mean, that's a huge puzzle to solve. And if someone can do it, hey, kudos to them, right? But what I'm saying is that you are less likely to get hacked. And what hacker is going to want to hack your small account? Now, if they hack the network or say Robinhood or Binance, yeah, they're a big account. So it makes sense to want to put all of that processing power to actually hack a network and get into their stuff for here, right? But for you or I, who maybe have a few thousand, $10,000, $100,000 worth of Bitcoins or a Dogecoin or whatever's, you're probably not a good target because the amount of time it'll take to get to you, it's just not worth it, basically. You're basically small fish. And that's okay. That's okay too, right? You don't want to get hacked, so it's okay to not be seen. You don't want to be seen. You don't want to be one of the top wallets. You don't want to be one of the big wallets here. You want to be one of the small ones here. And let your wallet grow over time. That's kind of why I encourage folks to buy the dips and not sell the rips. I mean, you can do that, but overall though, long term, timing the market is way better than timing the market. Well, this is your boy, Hey John. I encourage you all to subscribe, like, and hit that notification bell if you found this video helpful in any which way. And most importantly, you have an awesome day and stay cool. Catch you all next one.